Um, so I'm so glad that we are doing this.
Me too.
I'm so glad. So tell me a little bit about, first of all, let me just introduce the wonderful and fabulous Tara Bartoli. She is with the Loan Factory. And I have worked with Tara before, and it was such an amazing experience. I was so impressed with her professionalism and just the way that she just handles those little obstacles that can pop up. So, um, tell me, Tara, about this new product. I have a list of questions that I feel like people are going to ask me about. So first of all, what are the credit requirements for this loan? Are they different from like your standard loan?
So they are a little different.
Mhm.
And we actually offer this as four different programs. So we have an FHA, a VA, a USDA, and a conventional.
Okay.
So we're going to kind of just cover basics. And then depending on your client's particular needs, then we would kind of see where they're going to fit and how we're going to place them.
Okay.
But in terms of the credit score, yes, they are a little bit higher. FHA, VA, and USDA come in at a minimum of 650,
Okay.
and then conventional comes in at a 680.
Okay. Okay.
Yep. And then
Okay.
we also have the automated underwriting system requirements, which we run before we do any traditional loan. And that
Okay.
kind of sets us up for like a real good pre-approval prior to the whole loan starting.
Okay. Now the 650 and the 680, is that like do you guys do like a combined score, where you know how some lenders do like a combined model, or is that does that have to be individual?
So what we do is we pull credit in our system and then the middle score. So if you have two borrowers, it's going to be the
Right.
lowest middle score that gets pulled.
It is going to be okay. That's good to
Yeah.
know.
Yep.
It's
And
going to
you
be
can
the
get an
lowest.
idea on like Credit Karma and stuff like that, but a
Right.
lender pull is different. So
Yes, I know.
I
Yes.
always recommend that, it's best that we pull it in our system because then we can run all that automated underwriting system to make sure
Okay.
everything's good.
Okay. And what are the income requirements and documentation requirements?
Okay, so these loans follow like a traditional conforming loan. So income requirements are going to be pretty typical across the board for a loan.
Mhm.
And I'll just kind of touch base on what those are. Um, we basically check back on 2 years of employment history.
Okay. Mm-hmm.
So, 2 years of W-2s,
Mm-hmm.
federal tax returns if you're self-employed,
Mm-hmm.
most recent 30 days of pay stubs.
Mm-hmm.
So if you're paid, biweekly, that's going to be two pay stubs.
Mm-hmm.
Um, for variable income like commission and bonuses, for that income to be included, we typically like to also include year-end pay stubs for the last 2 years.
Okay.
Um,
Wonderful. And so pretty traditional. Um, so not a huge difference there. But tell me, so this is a loan. According to the little information that I did get. Um, so this is a loan where someone can actually build their home and purchase the land at the same time, whereas traditionally before you had to do that separately, right? So this
right.
kind of combines. So tell me about like the one closing. That must be like such a huge relief and burden off people's backs.
Yes, because in the past, a land loan, like we can do land loans, but typically they have a larger down payment and their own single close. So this allows the borrower to pick their land, pick their builder, and we handle the financing by wrapping it all into one loan with one close, it kind of all into one process.
That's amazing. So they can pick their builder. They can pick their builder. Are there any like any prerequisites for that? Are there any boundaries that are in place as far as choosing your builder?
Yes. So the builder has to be reputable and have a track record of building. It can't just be like, some random person. So we have builder documentation that's needed as well. So what will happen is at the beginning, um, we'll go through and pre-approve you as the borrower as well as your builder. So the builder will get submitted a builder packet and they'll fill that out and complete it. And then I'll submit that into our lender, which has an in-house construction department. And within 3 to 5 days, typically, we'll get an approval on the builder. And
Nice.
at that point, your client would be, free to go ahead and put the offer on the land.
Okay, great. Another another question I had was regarding homeowners insurance. Um, are there any exemptions with like flood zones or any particular areas?
Yes. Okay. So for this particular product, and this particular lender, we
Mhm.
can't be in a flood zone.
Gotcha. Okay, so no flood
So
zone.
that's
Okay.
so that's something I'm glad you brought that up
Yeah.
because when you're looking for land or when your clients are looking for land, there's a lot of homework to be done in
Sure.
terms of zoning,
Hmm.
in terms of exemptions, you know,
Hmm.
to make sure that you're able to do what you're trying to do with that land before purchasing.
Right.
Because that's not necessarily like a builder thing, right? Besides it
Yeah.
not being in a flood zone, but
Yes.
being able to use that land as it's intended and the zoning and all that.
Right, which kind of led to my next question regarding like ag exemption or like agricultural or farmland. Um, um, so so can you just kind of walk us through like what the typical steps to this type of transaction would be? Just kind of give us a walkthrough of what it would look like.
Absolutely. Okay, so the initial application will start the process for
Mhm,
your borrower,
mhm.
as well as your builder.
Okay.
As your loan officer, I will submit the builder's packet directly to the builder's construction department for
Mhm.
approval, which can take up to 5 days, as I mentioned before.
Okay.
We will be approving you as well as making sure everything is solid with credit, income, and assets.
Okay.
On the
Okay.
builder acceptance and their pre-approval, the project will be reviewed by the construction department and processing, underwriting, and closing will be typical, taking between 30 to 45 days.
Okay.
And then once we close up front, the construction phase will start as a 6, 9, or 12-month process.
Wow.
Mhm.
Okay. So you're talking minimum, typically at least 6 months.
At least 6 months.
Okay.
We also offer these programs, which is a whole different topic for manufactured homes.
Okay.
So those could take less time. And depending on the program, they also offer a 4 month on those.
Awesome. Okay. Um, awesome. What are some challenges that can based on your experience that can occur with these type of
Okay.
transactions?
Okay. So one major hurdle that can occur with these types of loans is the borrower's current housing situation. Okay. So if the borrower or your client is currently renting, this doesn't apply. That's like a perfect setup, right? Because they don't have a however, these loans are a one-time close, which happens prior to construction beginning. So when we're qualifying, if the borrower currently owns a home, they would need to be able to qualify with that current mortgage as well as the projected mortgage of the new.
Gotcha.
Not
Hmm.
ideal for most people.
Right.
So this leads to two options. They either have to get their current home sold prior to closing, which again
Right.
happens up at the front,
Okay.
or they have to be able to get a lease agreement in place,
Gotcha.
and
Hmm.
they're considering their current home as an investment at this point.
Okay. Gotcha. Okay, that
So
makes
that's
perfect
always,
sense.
mhm.
Yes.
So this is
Okay.
definitely something to consider from the beginning,
Absolutely.
to make sure that everything's lined up right.
That is okay. That was really good information.
Mhm.
Um, and so, are there any with this type of loan? Are there any grants available, maybe to first time home buyers, or maybe DPAs, any down payment assistance at all?
Um, so for our FHA,
Hmm.
um, I think if you were looking for a down payment assistance, we can see if the lender would allow that.
Hmm.
But the one good thing about these is if you're doing a VA or a USDA, it's
Hmm.
offered at 100% financing.
Oh, okay. Yes,
So
right. Because
that's
there's no money down. Correct.
there's
Yeah.
no money down for that.
Right.
And
Hmm.
another important thing to share on that is in the loan, the lender will pad in a 12% cost to help offset closing costs. So what they
Interesting.
do is there are a lot of construction fees involved.
Hmm.
So they take that into consideration as like soft costs. But
Hmm.
there's also 6% that's added into the FHA and VA programs to help offset that closing cost. So technically, I mean, if you were doing an FHA on this, it's still 3.5% down, which isn't much. And then with those closing costs kind of factored in,
Hmm.
your borrower is really not going to have to come out much on that end of things.
Nice. Okay. Nice. And my final question is, if you know how there are some borrowers or some, some homeowners that they already own a lot, they already own land. So, is that treated? How would that be treated as a refi?
For the conventional program, yes,
Okay.
it's treated as a refi. But one important thing to remember on that is that there's no seasoning requirement. So if they buy the land today and they start the loan tomorrow, you don't have to have that 6 month seasoning period for it to be considered as some equity involved.
Okay.
For the FHA program, yes, there has to be a 6 month seasoning.
Hmm.
So those they just kind of work a little bit different. So depending on which program they were looking at, the requirements are a little bit different on the land.
Okay.
So,
Okay. Well, I'm super excited. I can't wait to get our clients your way. To get this started. This is an amazing program. I love it, and I thank you so much for this collab. Hoping that we can do this again pretty soon.
absolutely. Yep.
But this was wonderful. Actually love this. Um, yeah. Is there anything else that you want to kind of add to just like this really informative Zoom call?
I just wanted to let whoever's thinking about this or considering it didn't know that it was an option. If you have a particular scenario, because there's a lot of moving parts with these types of loans. So I just wanted to stress it's important to work with someone like Ruthie or your realtor to guide you on the things specifically with the land that you're considering. And then we can kind of touch base on my end of things and make sure that the client's scenario is going to fit and which program would they fit best with. Um,
Absolutely.
and then I also wanted to say that we are going to do this again, and our next program we're going to talk about is renovation loans. I know that.
That is so good,
Yes.
because that is like probably the second most common question I get asked,
Yep. So
regarding resources for just a rental loan and
yes.
how that works. But I can't wait to do that one. All right. But Tara, thank you so much. You are so awesome.
Thank you for having me.
I cannot wait to get some of these loans closed with you. And I'm going to put your information on the post, all of your contact information, and I'll be sending people your way.
Absolutely. And just so you
Okay.
know, for these loans, I am currently licensed in 4 states to do these in Texas,
Okay.
California, Arizona, and Florida.
Oh, nice.
If you're outside of those states, I have somebody that I can refer it to.
Okay, that is amazing. That's really good information. That's good to
Yep.
know.
All right.
Okay, well, Tara, thank you so much. You are not only my loan resource, one of my loan resources, but you are an awesome friend, and I thank you so much. I can't wait to get started.
Thank you.
Okay, you have a blessed day.
You too.
Bye.
Bye.